Hi, my name is Jordan Bradford, and I am a CFP and Senior Financial Advisor for the Tranel Group. And I want to do a video here today to talk about the year 2024 in review and give a little context as to what happened in the markets and explain a little bit about what that means for investing going forward. So without further ado, let's talk about 2024's results. So the S&P 500, which is arguably the most commonly followed market index, especially here in the United States, the S&P 500 last year, 2024, was up just over 23%, which is a really outstanding year for the market, especially considering that the historical average for the S&P dating back over the last 100 years or so is right around 10%. So great year in the market overall, but there is some context to that. As the S&P changes year over year, because it is what's called a market cap weighted index, just meaning that the bigger a company grows to become, the larger portion of the pie they make up for in the S&P 500. So as those companies change in size, it also changes the overall complexity of what is inside of the S&P 500. And as of today here in early 2025, the S&P 500 is about 31% technology stock, which is a really, really large percentage. And a big portion of that is the Magnificent Seven, which are seven of the largest tech stocks in the world. And this has got like your Tesla, your Nvidia, your Facebook, your Google, companies like that are driving a lot of market returns. And because that weighting is so high in the S&P 500 now, we saw a better than average rate of return for the year 2024. And I'll explain kind of how I, come up with that information based on what the other market indexes are doing. So we'll talk a little bit about the NASDAQ next. So the NASDAQ is really our tech index. And that's the big one to follow if you're wondering, what's going on in tech. How is it performing as a whole? Maybe not individual companies, but just as a whole conglomerate of the industry itself. And in 2024, the NASDAQ was up a little over 28%. So outperformed the S&P, which makes sense because the S&P's performance, a lot of it was driven by tech, right? And when the NASDAQ outperforms at that level, you're going to see that pull up the S&P 500 a little bit. On the flip side, we have the third index that I would say most people, are aware of, they follow. And historically, this has been one of the more commonly followed indexes up until maybe the last 5 to 10 years. And that's the Dow Jones Industrial Average, or the DJIA, if you're looking for that on your stock app or on the internet. The Dow Jones in 2024 was up just over 12%. Which is still a really good year. In the grand scheme of things, that's better than market average returns by, 20% better, right? It's 12 instead of 10. But still, a ways off of what the techier S&P 500 and especially the NASDAQ performed in 2024. So I say all this, and really the main question I'm sure most people are asking themselves is, well, what does all of this mean for me and my portfolio? And what I would always share with folks is, don't let any individual year start dictating the decisions you're making on your overall investment mix. At the end of the day, your investments are designed to perform over a long period of time. And whether you had a fantastic year and you were maybe more in line with the S&P or even the NASDAQ, or you had a year where you were more in line with what the Dow Jones did in performance, the key is you still had really good performance, and you want to keep in mind, what is my investment mix really telling me? Is my investment mix a mix of really aggressive stocks trying to beat the market or take these really big swings? Or is my investment mix designed more with the goal in mind of, let's build a sustainable, reliable portfolio that can provide me income down the road, can help me fund future goals, and you can still make a really good amount of money in the market by having that type of strategy. But staying disciplined is really, really key. And even 2024 just showed how important that is. That if you start switching your investments back and forth from tech to maybe non-tech industries, you're going to see some massive variance in performance. And even if you go back just a couple of years, back to 2022, which seems like a long time ago now, but really that was only 2 years ago, all the markets were down substantially. The S&P was down over 20%. The NASDAQ was down over 33%. But the Dow Jones was only down about 9%. So that's a great example of one of those years where having some diversification, having a little bit less tech-weighted investments really helped you outperform the market. And even when the market is doing well and tech is outperforming everything else, even if you don't own a lot of it, you're still getting exposure to it by, that old adage of a rising tide raises all boats, right? And that's kind of a similar philosophy in the investment world. You want to have a really diversified portfolio, and the winners will help propel your portfolio forward. And if you have enough of a diversified mix, you're going to be able to offset, maybe a less than stellar performing sector for a given year. And that sector might be the best performer the following year, and you never know, right? If we knew exactly what would happen in any individual sector, market, index, well, we'd have crystal balls and we'd all be sitting on the beach as opposed to, working with clients and doing what we do for a living. So we don't have a crystal ball, but we do have a lot of historical based evidence to see what's going on in the market and design a portfolio that's really well diversified. 2024 was a fantastic year all around. If you have questions about your portfolio mix or want to know what the, long-term strategy is behind why you're invested in which industry or sector, please reach out to us. We are here to help. And without further ado, we'll let you go and have a great 2025. Thanks for listening.